I finally did it. I finally pulled the trigger on Seritage Growth Properties. That is the newest holding in this portfolio. I'll get to that in just a second. It is a feeler position for now. I'll explain kind of what I'm thinking about here and also about my broader portfolio construction because I do continue to try and consolidate things as we move forward in time. But before I get into that, be sure to subscribe so don't miss future updates about this portfolio. I put out a new update every single month. Anyways, back to the portfolio. I want to point out this cash balance up here of about $4,000 that is higher than last month. That is because I'm selling out a particular item in this portfolio, and that is this metals slice. If we go on in here, this was originally much greater than where it's at now, but I've been selling off these holdings over the last month, specifically the gold mining ETFs, the gold trust, and the silver trust as well. I have not touched the uranium ETF yet, though I would plan on selling that too over the next month. I plan on completely liquidating this part of the portfolio because I'd rather either have the cash itself ready to go to deploy into other things or to actually use it to fill out this new holding, which is Seritage Growth Properties. But overall, the portfolio was pretty flat on the month, down about 1%, which is flat relative to what's been happening over this last year. Been a very volatile year, but we did see some volatility within my holdings. We saw a near 30% rise in Alibaba after some positive news about the situation in China between the Chinese and the US regulators and all that great stuff that has really scared a lot of people away from many Chinese stocks. But meanwhile, we saw a near 25% decrease in Smith & Wesson after less than stellar earnings. But that's pretty much the nature of the game when it comes to investing in individual stocks. You're probably going to have a lot more volatility compared to something like a well-diversified ETF or a more diversified portfolio than this. This is a relatively concentrated portfolio, although it's significantly less concentrated than you might see in some other places. But do keep in mind that I have some significant retirement accounts that are entirely filled with broad index funds or almost entirely filled. So I get a lot more diversification there, and that's really just tracking the broader market, whereas this is a much more concentrated portfolio with a bunch of individual stocks. And soon I'll get rid of the metals portion of this portfolio, at least for now. But that said, let's talk about Seritage Growth Properties, at least for a little bit. This company effectively is all of the former Sears real estate holdings. So they had and still have a ton of real estate assets all across the country, and they are actually in the middle of winding up the company, or at least that's the goal. They're trying to sell all of their properties, putting it into a big pile of cash, and then they will distribute that pile of cash to shareholders. Management has predicted that once all the sales are through, they'll be left with at least $18 per share in cash value that could then theoretically be distributed to shareholders. That is the plan. So as long as all goes well there, you ideally would have some decent upside even from here. It has been quite volatile over the last year. If we actually go into the details view here, it's been a pretty wild ride for Seritage. I've watched this stock for a while, especially investing with Tom, who's done a ton of great coverage on this stock, and he is currently invested in it. So check out Tom's channel if you haven't already, and check out Punch Card while you're at it. But so far, they've had some pretty significant success in selling off their properties and currently have a number under contract as well. But they've been pretty diligent in paying down the loan that they have with Berkshire Hathaway. They've restructured this loan in the past, and as it currently stands, they have about $1 billion of this loan balance remaining, but they've been making pretty significant lump sum payments every couple of months as they continue to liquidate the portfolio. And the remaining $1 billion or so is due by July of 2023. And that was the big thing that had me worried and still has me a bit worried about Seritage, is just the timing involved with the debt that they have right now. Because if they don't pay it, then they're going to be in some potential trouble, and who knows what will actually happen from there. We don't want to get to that point is really all I'm trying to get at. And it's a big risk with this holding. Seeing the progress that they've had with paying down these properties, even in an environment where interest rates are increasing, it's a pretty positive sign in my view. And even if we're seeing a bit of a slowdown in real estate in general, especially on the commercial side of things, it's not as though we're in some gigantic bear market where no one can sell anything and they're selling for things for pennies on the dollar. We're not at that point yet. Sure, that could change on a dime, but I'm not really trying to guess on where the market is going to go, especially in the short term, because a lot could happen. But I will acknowledge what could happen if we do get some sort of market crash, or if they're otherwise unsuccessful in selling off their properties in time. That's going to be a big problem. So that's the big risk here. But then the upside is that they're already well on their way towards liquidating the company. They're paying down this debt. They're saving on interest costs in the meantime by paying down the debt. And they've remained pretty focused in liquidating this portfolio, and so far so good. So that's why I've opened up what I'd call a feeler position on Seritage Growth Properties of $1,000. I probably want to get this closer to something like a $10,000 position if the price drops a bit. I'm considering how much I'd want to go in with the $12 price it's at now. It could stay there for a while. It could fall a bunch. It could rise from here. I'm not really sure what's going to happen. No one's sure. And I tend to like this opportunity a bit better than my metal slice, which was really there as a sort of cash alternative. Ended up being quite a negative cash alternative, but that was kind of the initial thesis here, as you have commodities rising in value because of inflation, among many other things. So I had a lot of exposure to the companies that mine these metals, and it ended up not working all that great in the short run. I didn't hold most of this position for too long. We're talking about a year or two since I've really kind of had this thesis, and it could have gone better, of course, but the whole point was just to park it there. And then when I saw a better opportunity, or if for some reason it made sense to sell off the metal slice, then I would use that cash to deploy towards something else. So that's largely what I'm in the middle of doing now. And I do have some margin outstanding on this account. So I do want to have a little bit of cash for now because I'm in the middle of a business purchase. I'm looking to close on a business by the end of this month, and that's going to require a lot of cash, and I'm raising a lot of that cash through debt, but I don't want to be in the position where I have very little cash after buying the business, because I want to have somewhat of a cushion once I take over the business, because there is a significant amount of debt being used to buy the thing in the first place. And I don't really plan on adding a lot of new money to this portfolio for the foreseeable future as I work through that business transition, but the deal should significantly increase my cash flow position, and that cash flow could be used to buy more defensive things like stocks and real estate. And I've got some margin debt on this account to pay back first. Exciting times ahead. And if you want to see what happens, be sure to subscribe so you don't miss future updates. But until next time, take care.